Good afternoon, ladies and gentlemen. The time is 1:30. Today is the 11th of March. And so a couple of things. Today, once again, like the past two Fridays, hasn't been a great day to trade. And I was thinking of this yesterday that, the previous Friday, uncertainty over the weekend, whatever fall off in premium had to happened in the first 45 minutes, and the one before that as well, the same. And through the rest of the day, there was no considerable fall off in premium in any way. The reason for that is whenever there's a uncertain weekend, people will hold their long IV positions wherever, they've created long IV positions over that weekend. But during the course of this week, a lot of de-escalation has happened in the Russia-Ukraine situation, at least as far as rhetoric is concerned. So it doesn't look like there'll be any sudden case of escalation relative to what it was the weekend before, the last 2 weekends before, which is why my idea was, okay, a short volatility trade this Friday could work out quite all right. But there was one thing in the morning, and I think here I got impulsive, wherein I was deciding. So I was trying to decide whether or not to take a trade till about. So that's why I didn't enter at 9:15. I generally enter by 9:15. So it was 50% on take a trade, 50% on don't take a trade, and I'll tell you why I waited almost for this long. That's because if you see the closing price of 17,100 call yesterday, the closing price is 65. And if you see the closing price of the 15,700 put, this is the triangle that I entered. The closing price is 43. So the put has not gained in any value, whereas the call has lost a lot of value. So this is opening around, so it's trading at around 80, whereas yesterday closing price was closer to 120 for this particular value. It's given up 40 points, 33% of its value it's given up overnight. So there has been a huge crush overnight itself. And here I'm trying to decide, okay, is it really worth taking a trade or not? I think I got a little impulsive here. I think there might be 2-3 factors that added to the impulse. One was that, okay, this Friday should see a volatility crash. I mean, it did by the open itself. And secondly, I think because yesterday's expiry was a break-even close, I think I got a little impulsive. Okay, let me take a trade and keep a mild stop loss. The issue there became that the calls right from the open at my entry price at around, my average was 37. They started to rocket in one direction. So if you see, after the first candle, this is where I entered. Not such a good. And if you see also my strikes, the way they've been selected, my put option has more value than my call option, right? So the idea was, okay, in case there's an up move also, a little bit this put will give up first and then only this call will gain. That wasn't the case at all. So I'll show you. So I've entered literally at the day's low on this call. I mean, my price is in the week of this. In fact, it's not even on the week, right? So this is my average. And this call starts to blow up, completely blow up. Very quickly, I had to make some adjustments. I rolled up my put very aggressively to from 15,700 first to 15,800. Even now, the call was trading at around 42, 43. I tried to keep more credit from the put side. Didn't work. Continued to head higher. Purchased back the put once again. Purchased back the 15,800. Moved it directly to 16,000, which was trading at 70 rupees. Whereas the call had now shot up to about 58, 59. And from there, despite having much more credit, I had much more credit on my put side. It didn't make any sense because the call just kept gaining. And at my worst mark to market, I was at about 3.5 lakhs negative. And I think the first mistake was taking this entry itself. It was impulse, and I have to agree that after looking at something I was trading for 120, opening for 80, then trying to short it to make some gain, there itself it went wrong. There's no excuse for it. The idea was that, see, when volatility crash happens, it can continue to happen. And if you see yesterday, S&P 500 VIX also, it fell a good 7% or so. So the idea was that, okay, we can see even more crush from there, or at least these puts will get crushed in case we do make a reversal, because the main has happened. Regardless, it is what it is. and I couldn't exit in time because the calls really blowing up. Tried to manage with the put side. It didn't matter if you got the delta right today, because the way premiums were behaving, puts were also gaining, calls were also gaining, so it wasn't really that you could manage with delta. Anyway, from there, after the first 20 minutes, first 30 minutes, my mark to market was about 2.5 lakhs negative. So the entire period, my mark to market got better and better. At one point, it went as low as 1.5 lakhs negative. I had to have a trailing stop loss. I kept a trailing stop loss of the same 2.5 lakhs. And when that hit, I took an exit. I purchased this back for 75. So I knew while exiting that definitely I'm purchasing into an even more IV spike. I exited this for 76 and this for 50. So around 126 is probably what I paid for it. Trading now 2 rupees cheaper than that. But regardless, had to take an exit because I had to take an exit. Maybe by the end of the day, these options do cool off. But coupled with the fact that I had a very bad entry and then that culminated into having a trailing stop loss, which was bound to get hit like this, you can't do too much about it. See, basically, Fridays are all about, are people carrying long IV positions into the weekend, or are they getting rid of them? If they're getting rid of them, strangles will make money. If they're not getting rid of them, strangles will not make money. Some people will say, why not skip trading Friday altogether? That's fine. But if I actually go back historically and see, I've made more money on Fridays than lost. It's obviously not as good as Tuesdays, Wednesdays, and Thursdays. But net for Friday, I'm positive. That's why I still continue to trade on Friday. And yeah, today just didn't work out, and that's all there is to say about it. So thank you so much for watching. Have a great weekend, and I will catch you next week. We'll see if it's worth trading on Monday or not. And I think I'll have to pick my trades more carefully. I think this was at the entry itself, I should have known I'm not entering a great trade because the risk to reward would not be good after there's been like such a large fall off over the night. Take care. Have a good one.